Nasdaq out with earnings earlier this hour, beating on both the revenue and the earnings per share numbers. Joining us right now is Nasdaq CEO Adena Friedman. And Adena, thanks for being here.
It's great to be here.
Better than expected numbers. And I think what you point out in this is that your revenue in the non-trading segments was up 10%. And this is all part of your strategic shift. What exactly is that shift?
Sure. Well, we are really pleased with our performance despite a pretty challenging volume environment in our trading businesses. So in the non-trading businesses, we focus on our market technology business, where we provide the technology to 110 other exchanges and 150 broker-dealers. And in this quarter, we signed two significant new deals, one with Deutsche Bank to provide their single-dealer platform, and the other with the Options Clearing Corporation to support their clearing system. So those are the things that we do in that business that has driven our revenue up 17% in the quarter. And then we have our data and analytics business and our index business, and clearly the index business continues to perform very well.
What's behind the strategic shift? What made you think, okay, we need to head this direction?
Well, I think we want to be a partner to all of the players in the capital markets that we serve, whether it's corporate clients or broker-dealer clients, buy-side, or other markets. And we want to use technology and data and analytics to drive our strategy and drive our business, because that's what really they need in order to be successful in the public markets today.
Having said, Mike,
I was just going to say M&A is a big part of that, right? So you're buying companies in this area. So are other folks, right? So I guess what is Nasdaq's edge in trying to consolidate these fintech businesses?
Well, I think the first thing is the majority of our story really is an organic story. So the 17% growth is an organic growth number, and so is the 10% growth in the non-trading businesses. But we do some tuck-ins. We focus in on those technologies that really do underpin the capital markets, trading, clearing, surveillance, and compliance technologies. And then on the data and analytics, we focus in on decision-making type of tools, whether it's alternative data or the kind of buy-side intelligence tools. So we have a little bit of a different spin than a lot of our peers in terms of the types of assets we're looking for.
You are here on a propitious day, I should say. Nasdaq closing at another new high yesterday. We have seen a big pickup in markets since the lows that we saw at the end of the fourth quarter. What's happening? What do you think is going on, and what's your gut feel about it?
Well, I think, first of all, the GDP growth continues to be pretty strong, and in fact, probably stronger than what people were expecting earlier in the year. The second thing is that the interest rate environment is very stable right now, which then creates less noise in the markets. And then the third thing is I think a lot of companies are starting to come out and they're beating expectations. So that performance of the companies against lower expectations is also helping drive the markets.
Just an earnings recession that we thought was going to be here, maybe not.
Yeah, I think generally, though, the economy is doing quite well, and it's showing a level of resilience that I don't think people are expecting going into the year.
What's happening with all of these hot IPOs that are coming out? Or hot IPOs, some of them kind of not so hot after they're out?
Well, we actually looked at it, and the companies that have gone public, the tech IPOs that have gone public on Nasdaq in 18 and 19 so far have actually had 31% average performance. So there's some really great companies like Zscaler that has had outstanding performance. Obviously, Zoom had a great IPO last week. But I think that the performance of the IPOs have done well overall. And so I think that that's then driving more demand for companies to come out.
Even though Lyft is probably the biggest highlight that people are watching, and putting that in contrast with Uber?
I think that Lyft is one story. I also think that the performance of Lyft as a public company is going to be determined by their performance as a business over the long term, not over the first 3 weeks of trading.
What do you think is going to be something that really rises over the summer? What do you think is on investors' minds? What do you think, or what are you thinking about?
Well, I think certainly that the China trade deal continues to be one of those things that everyone's watching that over the next few months to see how that comes to fruition and whether or not that creates even more opportunity in the economy or whether that creates some risk. I also think that our pipeline of IPOs is actually 20% higher right now in terms of filed S1s than it was a year ago. So we continue to see really strong demand from investors for companies, and a lot of companies really want to come out and tap the market.
I can't imagine that the China trade is really high on your list of worries, though, potential worries. If you have anything that you're kind of out there looking at.
So Nasdaq as a business, that's not a worry for us. I think that Nasdaq as a business, we're really focused on really continuing to drive demand for our technology services and making sure that our data and analytics meet the needs of our clients. So to me, those are the things that are most present in our minds as we go through the year.
What do you hear in terms of companies potentially going public, given all the focus on IPOs this year?
The companies we see a lot of business-to-business tech companies coming out, so more enterprise businesses. We definitely are seeing some additional consumer tech companies coming out. And then private equity firms are also looking at exits out of their portfolios as well. So we have a couple of great companies coming out of the PE space as well this year.